Welcome to Breaking Bread Presents Created Equal. Now, as traders, we've all sat in front of our charts and we marked every swing high, we marked every swing low, and we consider these strong areas since we're marking them, right? And then price approaches our strong areas, and what price do? It run right through the area. Now, we use these swing points to help identify our structure, right? Because we've all been taught structure, higher highs, higher lows, lower highs, right? That's the structure that we've been taught. But it's that strength behind that structure that we have to focus on. And those are the levels that I'm going to focus on in this session, for us to just mark those, eliminate them other ones to where we're marking all these lines on our charts and price running through them. We just want to focus on the ones that have the strength behind it because we understand not all swing points are created equal. But once you understand which ones truly matter, then your chart will become cleaner, your bias gets clear, and your decision making is going to get sharper. So let's get into it. Let's break some bread. Let's break some bread. All right, so misconception is every swing high and every swing low matters. If that was true, everybody would be profitable, right? The market doesn't respect every level, it respects that strength. So before we talk about strength and the levels to mark, we need to understand what a swing point actually is. So what is a swing point? Well, a swing high is a high that is higher in price than the candle that came before it and the candle that came after it. Your swing low is a low that is lower in price than the candle that came before it and the candle that came after it. Understand a swing point is simply just a turning point in price. Now, it could just be a pause in price, it could be a full on reversal, it could just be a slight pullback, right? But that's what it is, swing high, swing low. So don't automatically assume, okay, I have this swing point, then it should, no, that don't, no, there's more to it. There's layers to it, but we use these swing points to start to identify that structure that we talked about. So swing high, swing low. We understand with candle anatomy, the high of the candle, if we're looking for the high of the candle, we're looking for the wick that's on the top side of the body. With the lows of the candles, we're looking for the wick at the bottom side of the candle. So with a swing high, like I said, definition is it is a high that is higher than the candle that came before it and the candle that came after it. So that makes this a swing high. This high here is higher in price than the candle that came before it and the candle that came after it. High here is higher in price than the candle that came before it and the candle that came after it. Those are all examples of swing highs. Now, swing lows, again, we're going to focus with the bottom of the candle, low, right? Lower in price than the candle that came before it and the candle that came after it. Swing low here is lower in price than the candle that came before it and the candle that came after it. Swing low here, lower in price than the candle that came before it, candle that came after it. Even this little baby wick over here, it is lower in price than the candle that came before it and the candle that came after it, right? Now, where we get in trouble is we mark all of these. We don't need to mark all of these. We need to understand the ones that have the strength behind it. Now, we use these for structure, but it's not the ones that we want, right? We want the ones with that strength behind it. Just because it's structure doesn't mean that it's strength, right? Just because price pauses doesn't mean that price cares about that level, right? Because we got to understand some of these swing points are created just as noise. It's just to throw you off, it's just to confuse you on what the market is trying to actually do, right? So that's where that higher time frame would come in at. But we have to understand that just because it creates a swing point doesn't mean there's strength behind that swing point, right? So how do we tell the difference between the ones with strength and the one without strength? So a swing point begins to look strong when price moves quickly away from the level, right? It has to have some type of momentum. It has to have some type of urgency, right? Not drifting, not stalling, right? Give me that swing point, create that, and as soon as possible, get away from that area. I need the buyers as soon as possible to kick in, or I need the sellers as soon as possible to kick in, right? Now, that may look like an engulfing candle, that could look like an outside candle, that could look like a fair value gap candle, but I need that full on. I know buyers is here, I know sellers are here, one of the two, right? But I need those large candles to get us up out of that area, right? But that's not it, right? That's not it. That's just part of the puzzle, right? That's just the triceps. Now let's look at the biceps. Let's look at the biceps, right? We need to identify, did it change the market? So when I'm talking about changing the market, I'm talking about it has to go do something new, right? It has to go do something new. So did it break a previous high? Did it break a previous low? Now, I'm only talking about a close, not a push. It can push all day, leave a wick behind, all that. That is great. No, something new means it has to close higher or it has to close lower, right? And then once it does that, I need to identify um, that a direction is clearly shifting, right? Right? But if nothing new happens, then it's not strong in my opinion, right? It has to go do something new, right? So, and we're going to get into an example here shortly, but it has to do something new, right? And once the swing proves that it's changing the market, then that lets me know that that swing point, that leg, that is worth watching, right? Those are the levels that we need to identify, right? So when price moves strongly from a level and breaks that structure, right, doing something new, then that area becomes important going forward. So when price returns to that area, it can act as a strong area of support or act as a level of resistance, right? That's going to be a strong reaction area that traders are looking at, right? But it has to have those components, a part of that leg of price for me to mark that level. Every swing point doesn't have that. Every swing point does not have that. So let's talk about doing something new, right? So we're looking at an uptrend and a downtrend. So doing something new, meaning after price pulls back, I need price to go do something new. So this is the last high that was put in before price pulled back, right? So doing something new would mean I need price to go close above this area. Same thing here. This is the last high that was put in before price pulled back. I need price to go do something new, meaning it has to close above this area. Same thing here in the downtrend, right? Price has to go do something new. So this is the last swing point, right? This is the last low that was put in before this move up, right? So I need price to close below this area. Same here with this swing point, right? Price put in this swing point, it went in, put in that swing point. So until we break these lows, there's nothing new to it. When it finally break below these lows, meaning close, then that is something new. So that is what I'm referencing when I say something new, not push, right? We can push all day and leave these wicks behind. Go do something new. Now, where we get in trouble at as traders is these wicks. We mark them all and we think they all mean something and they're all dramatic and they're all affecting our emotions, right? And we got lines going across our charts on all of these wicks, and this is where we get in trouble at. But understand, a wick just simply means price moved and then it pulled back, right? It moved there and then it moves back. That's how a wick is created, but that does not represent strength. That is not representing strength, right? Strength is confirmed by what happens afterwards, right? What happened afterwards? Did it get up out of there, right? Did it go do something new? That's what we're looking for. Now, why do we fall for these wicks? We've all we've all been in the trade to where a price will move strong in our favor and then they do this crazy pullback and we just sitting there looking crazy like, no, they didn't do that. Yes, wicks play on our emotions, right? Wicks play on our emotions, and the market knows that. The market knows these wicks play on our emotions, and this is why we fall for it, right? And that FOMO kicks in, and now we're chasing price. Like, it's all emotional, right? We have to avoid this pitfall, though. So, what levels to mark, right? We're not going to mark our levels just because there's a wick behind. That's not it, right? We're going to mark the levels because it did something new. It changed the market. So we're marking levels where a strong move started, where structure broke, right? What I talked about, closing lower, closing higher, right? Doing something new. And it continued after that. We don't want none of the wick only levels. I don't care if it's just a wick. Did it do any other three things that we talked about? If it didn't do that, then that's not what we're talking about. That's not what we're trying to mark. Now, if you want to mark them, more power to you, right? More power to you. But I'm only concerning with the levels that I see for sure. Sellers was there, buyers are there. So before I mark a level and before you mark a level, you should ask yourself, did price move away strongly? Right? Did it give us an engulfing candle? Did it do the fair value gaps? Outside candles. Did it make a strong aggressive move after giving us our swing point candle? Right? Somewhere soon as possible, I need price to get up out of there. Now, it might not be the next candle, it could be the candle after that. But as long as price get up out of there, right? Get up out of there, then it meets that criteria. Okay, cool. Did it break a previous high or low? And I am talking about a close, right? Doing something new. If it did that, great. Did it continue moving in that direction? After it did something new, did it continue heading in that direction? If it did, then these are the levels we want to mark. If it did not, then these are not the levels we want to mark, and it may be considered a weak level, right? It may be considered a weak level. Now, we understand that trading is a game of probability. We've seen weak levels hold, and we've seen strong levels break. We've seen trend lines hold, and we've seen trend lines break, right? We've seen broadening formations hold, and we've seen them break, right? So it's just a game of probability. But I prefer to mark the levels to where I clearly see price has made a strong move, leaving all this evidence behind. So then when price returns to this area, I'm looking to see if price is going to give the same reaction that it gave before, right? If they was there before, then it's 9 times out of 10, they're going to be there again when price comes back to that area. But I'm only marking the areas that have proof that they was there before. So some examples of some strong and some weaks, right? So here I have price put in a swing high, right? That's check. All right, so did price move aggressively? Yes, eventually it did, right? Gave us this engulfing candle. That answers that question. Did it do something new? Yes, because this is the last low that was put in before this move to the upside. So I need price to close below that. It did that. Boom. Strong leg. This is the area I'm marking, right? Down here, price put in a swing point, right? Did it give us an engulfing candle? No, no, no. Did it move aggressively away? No, no, no. Right? It's not doing any of those things, right? So that's a no. I'm not marking this level. Now, you, like I said, you want to mark every wick, go for it. There's no strength here. Compare this move to this move, right? This is what a strong move looks like. This is a strong move. Let me know that sellers is here. This is not. This is a fight between both. This is not what we want to see, and this is not what we want to mark. So I would not mark this as a strong leg of price. Here, price put in another swing point, right? Now I look at this as one whole leg. Now, if you want to take it into pieces and say, okay, swing point was put in here, price pull back, put it in another swing point, you can. But at the end of the day, you can mark this whole range if you want to, but at the end of the day, it do got to get above this area, right? So this is why I keep it here, right? This is the last high that was put in. This is a lower high. So I'm concerned more with this high than this high. Cool. Did it give us the candles that we need? Did it break and do something new? Yes, it did. This was the last low that was put in before the pullback. So I need price to close below this area. It did that. So I would mark somewhere in this area, right? If you're taking it piece by piece, maybe you mark this area, maybe you mark this area. Um, It's totally up to you what you want to do, right? Totally up to you what you want to do, but it is a strong area. So if price returns to this area, I'm looking to see if it's going to give the same reaction that it did previously, right? So price gets down here, put in the swing point, right? Price pulls up. Did it do something new? No. Now this is a fair value gap, right? It did move aggressively, right? But it didn't do anything new, right? This is the last high that was put in before price started to pull back up here. It did not close above it. You see how it pushed above though, but it did not close above it. So no, I would not mark this area. This leg of price almost looks like this leg of price, right? Swing point, yes. Did it move aggressively away? No. Did it create that engulfing candle, fair value gap outside? No, it didn't, right? It's staggering away. It's just slowly drifting. We'll get there when we want to, right? But I would not mark this area, right? I'm not expecting price to respect this area. I'm not expecting price to respect this area. I'm not expecting price to respect this area. But my strong areas, when price return, I'm expecting price to respect that area. And you see price got up to this area. It played a little bit, but it finally broke down, right? It finally broke down. So this was, it depends on which one you want to look at, right? So you can go with this last high that was put in, or with this pullback, this was the last, I'm sorry, low. This is the last low that was put in, that was broke, or you can go with this low, right? This is a swing point as well. You need to close below that. Whatever you want to go with, right? It's going to be marked on your chart. This is a strong leg of price. All right, so let's take them to the charts. Let's look at some examples. And let's see if you guys are picking up what's being put down. All right, so now let's identify some swing points, some swing highs, swing lows. And let's identify strong versus weak levels, right? We're trying to eliminate the noise. So we got to stop marking these weak levels, right? When I started the call, I said most of it was taught structure, right? And I prayed everybody was taught structure. But we know in an uptrend, our highs should be getting higher. We know with a downtrend, our lows should be getting lower, right? That's what we've been taught. I pray everybody's been taught that. But it's not the structure. It's not just the structure. It's what happens after that structure is built that we have to pay attention to because we'll come in and we'll identify our swing points. We be like, okay, that's a strong level. That's a strong level. And then this is a strong area too. Ooh, and then that one too. Oh, and then that one, right? And this is what we do, right? And then we just got all this noise, and now this is stopping us from getting into a trade. We don't know which one to trust. We gotta eliminate some of that, right? It's what happens after that swing point was put in, right? Did price move aggressively from that area? Did it leave a fair value gap, outside candle or engulfing candle behind, right? We want to see those strong body candles to let me know that buyers is truly there, our sellers is truly there, right? We gotta eliminate the noise. Once we can identify that, if it has script, then that's the one that we want to mark, right? So let's identify. All right, so we got swing point here. Let's see if we should mark this area or not. We got a swing point put in. That's first. Cool. Did it move aggressively from the area with those large body candles that we like to see? It did, right? Now, did it go do something new? Meaning that it has to go close lower than that last low that was put in before price started to head to the upside in this situation. Did it do that? It did. So what we gonna do? We're gonna mark it. Now, however you want to mark it, that's totally up to you. If you want to come in, do the body to the wick, you want to use your rectangle tool. There is no rule saying you can't do what you want to do on your charts. But I will say this, don't just do this, right? I teach my community bodies first, wicks second, right? It's far too often to where we'll find ourselves in a trade and we like, oh, price gonna run them wicks. And it don't even get to the wick. It falls short at the body. As you see here, it didn't even get to the wick, right? So at least at minimum, you have to mark that body, right? Bodies first, wicks second. We're gonna use a rectangle tool for this call. But all right, so we know that this is a strong area. Did everything that we wanted price to do. Great. Cool. Price put in this swing low. It puts in this swing low. It pulls back. It puts in this swing high. Why is this a swing high? Because this high is higher in price than the candle that came before it and the candle that came after it. All right, so this is the last low that price was put in. Did price close lower? It did, right? Did it give us a swing point? It did. But what did it not do? It did not give us one of those candles that we would love to see. One of these big body candles like this. That's what we want to see. So it did not do that. So we will not be marking that, right? We will not be marking that. All right, next swing point. We see price pull up, give us a swing point, right? Higher than that high, higher than that high. So this is a swing point, right? Did price move aggressively away from this area? Not really, right? But it did give us a candle that we like. If you trade fair value gaps, you know that's a fair value gap. Did it do something new, right? Let me see. I'm trying to see if it had a wick on it. All right, so did it do something new? It did close lower. It did close lower. So based off the rules, it's fitting all three of the criterias within the in the rules. So yeah, you gotta mark that one. You gotta mark it. You gotta mark it. All right, so we see price pull up. It respected that area. All right, great. So we know that this is a cool little area right here, right? This is cool. So this is a great marking that we have here, right? Price put in this swing point here. Oh, let's go to this swing point. Price put in this swing point here, right? Higher than that high, definitely higher than that high. And it starts to break down, right? Um, did it move aggressively? Yeah. Did it give a candle we want? No. So are we marking this? No, and we wouldn't have to mark it anyway because we already got a level marked here anyway, right? It's already a level marked here. Now, if you're looking at this as one straight leg, which I would do, right, then this definitely is a strong area. But again, it's already marked, so there's no need for that, right? We see price put in a swing low. Why is this a swing low? Because this low is lower than that candle that came before it and the candle that came after it. So this is a swing point, right? Swing low to the downside. Price started making its way to the upside, right? Did it give us a candle that we want? Right? It did. It definitely did. Did it go do something new? Meaning that it has to close higher than the last high that was put in before this drop. Did it do that? It did not. So we will not be marking this area. This is not a strong area we're going to mark. Price gets inside our area again. It stuck its little pinky toe in there. It came out. Right? It came out. So we know that again, this is a good area that we marked. This is looking real, real strong, right? We put in a swing high, right? Start making our way to the downside. Now, is it giving us a candle that we want? No, not yet, right? Not until here did it give us a candle that we want. Did it do something new? It did. It broke down eventually. So we know that this is a strong area. Now, I personally would not mark this area. Why? Because I don't need all this noise. You think I need this zone and that zone? I don't. I don't need that. Now, if you want to come in here, maybe you want to just expand it just a little bit and be like, okay, well, let's just get that area too, right? All right, we'll just get that area because you could definitely do that. There's nothing in the rule book saying you can't trade how you want to trade. There's nothing in the rule book saying that. But we know that this is gonna be a strong area, right? So you can definitely do that. I'll put it back up though. So price breaks down. We put in this swing point at the lows here. Again, if you look at this as one straight leg, which I do, I would mark these lows. Why? Because we put in the swing point, check. It gave us a counter that we want, check. Right? It's moving away from our area, check. So boom. Now, if you take it piece by piece, you would take this leg, right? You'd be like, okay, within this candle, within this swing point, it did everything that we wanted price to do, right? It did something new, right? Close higher. It gave us our engulfing candle, fair value gap, outside candle, right? That big body candle. It definitely did that. So if you take it in pieces, you will mark this one. Nothing wrong with that, right? Nothing wrong with that. All right, so price get up here at these highs, right? It puts in a swing high. Why? Because this high is higher in price than that candle and that candle there, right? So the candle that came before it, the candle that came after it, right? So we know we have a swing point, but is this level worth marking? Well, let's see. Is it giving us a strong move away from our area? I would say so, right? I would say so. Did it close lower than the last low? So that swing point that was put in, did it close lower than that? It did not, right? It's like right at that level, right? So I wouldn't mark that one yet, right? We got to see what this next candle does. So let's see what the next candle does. Because if the next candle can close below that, then we for sure know that this is going to be a strong area and we want to mark it. So we see price finally did close below that area, right? So we will mark this area. So we want to see when price returns back to this area, is it going to give the same reaction it gave before or not? right? Same thing here. When price gets into these areas that we know are strong areas, we want to see if it's going to give the same reaction it gave before or not, right? So that's what we're looking for. That's exactly what we're looking for. So we're going to run it for it. Let's see what price does. All right, so we see market opened up. It dropped. It hit that level. It hit my level, right? It respected that area and started to pull back to the upside. Now, for me, when I trade, I'm looking for price to sweep at those highs and lows. If I can get price to sweep at those highs and lows, I understand that I am looking for a reversal to play it back to the opposite side of the range, right? The opposite side of the range. So we got to go back to them highs. That's what I'm looking for when price confirms a sweep, right? So even if you didn't mark this level, it still respected this area. Why? Because it did not close beyond this range, right? It got back above this area. So these are still respected areas. These are still strong areas in my eyes, right? Now it might be weaker, but it's still strong. It's still a strong area. So if price returns back to it, we want to see what price is going to do, right? At any level, we should think that. All right, so price gets to our target, our level that we have here as a strong area, right? It's currently respecting that. And this is where people get trouble too. And this is how the market play on us, right? Because what is price doing right here? It's appearing to give us a swing point candle. That is what it's appearing to do. And it's at a level that it gave it before, right? That's what it's appearing to do. But you just saw that it didn't do that, right? But that's how we get in trouble. So you want to make sure that you are taking entries off of what the higher time frame is saying. So make sure it aligns with what the higher time frame is saying. Right now, the higher time frame has swept some lows, right? So I'm not even looking for price to reject anything I got here in the middle. Like I'm not looking for it to do that, right? Can it do it? Yes, but I'm playing off probabilities, right? That's not high probabilities. But if you're one of those people that look for bounces and rejects and just all throughout the day, then you're doing yourself a disservice. You're working too hard, right? Make sure it aligns with what the higher time frame is saying. But this is how the market play on us. They'll do something like this, give us that swing point. And y'all saw that next candle. It said, "No, it's not going to be a swing point," right? That's that's what it said, right? And look, it's doing it again. It's giving us another swing point after at another level where we got reaction before overnight. It's doing it again. It's doing it again, right? Now, I do want to say though, it's nothing wrong with taking an entry here. It's nothing wrong with taking an entry here. But once price tells you it's done, it's done. And how does price tell you it's done? When it got back above this area. If this is going to be a respected area, right? If this is going to be a strong area, then it should just continue heading to the downside. So your stop loss has to go somewhere above this area because now you know your idea is now invalid. Same here. You could take entry here, right? It would only it aligns, right? Okay, well, this is a strong area. This is an area reacted at before, so it's nothing wrong with taking that. But once price tell you your idea is invalid, it's time to let it go. It's time to move on. It's time to move on. All right, we see price broke to that level. Well, I don't have nothing strong until up here, right? And then it gets up here. Um, and it hits target, right? That's what we want to see. Simple, easy. None of that extra noise that you see on the charts, right? It's simply from target to target to target to target to target, right? As soon as it puts a close beyond that target, we go to that target. Put a close beyond that target, we go to that target. Simple, right? Now, like I said, it is a game of probabilities because it's times to where you'll see price run into what we consider a strong area, disrespected and run through it, right? Just like it did here. Or it's times to where you see price and we consider it a weak area and you be like, wait, what? Now I want to respect this weak area. So it's just a game of probabilities, but it's just higher probabilities to go where you see that there are clearly buyers sitting, there are clearly sellers sitting to where they actually moved aggressively from that area. It did something new to confirm it. Those are the areas that we got to focus on. Those are the areas that we want to pay attention to. All right, so let's take it back to the slides. Hope you guys picked up that information that was put down right there. All right, so let's talk about higher time frames. Higher time frames. Now, I'm not gonna touch too much on this because I feel like a follow up is brewing in me, and we're gonna go more in depth in a part two if it keeps a broom, but higher time frames. So understand a level on a higher time frame, like your daily, your weekly, your quarterly, your monthly, your yearly, your 4 hour, your 15, whatever your higher time frame is, right? Whatever your higher time frame is, those swing points matter the most, right? Unless you're a scalper, right? You don't really probably care too much about what's going on in those higher time frames. But that's what matters the most, right? That's where we can go see where buyers truly stepped in or where sellers truly stepped in, right? When we can identify it on those higher time frames, and once we can identify it on those higher time frames, right, we understand if we can catch it at the bottom, right, that's where those big moves are going to come from, right, where we can catch it off those levels that we now consider strong, not the weak areas, not that stuff in the middle. We want those strong areas based off the higher time frame. We understand that the higher time frame gives us direction, and the lower time frames is just for entries. Whew. So we got to make sure they align, right? When they align and we have more things in confluence, more time frames in confluence, then we understand that this is a higher probability trade for us to take, right? It all has to align though, and that's where we get mixed up, right? We'll be on the smaller time frames trying to take an entry that's going against what the higher time frame is saying. It's so much easier to go with the flow of price. Just go with the flow of price and you will be okay. Now let's look at this. I got the 2 minute and the 15-minute time frame here. 15 minutes is gonna be my higher time frame, 2 minutes is gonna be my entry time frame. Where stick man is pointing at, that's where our price is aligning on the charts, right? So if I look at this on a 2 minute time frame, right? I see price put in the swing point here and the swing point here, right? Now, if you look at this as one straight leg, then you will mark this area, right? If you don't look at this as one straight leg and you take it piece by piece, then you wouldn't mark this one. Why? Because yes, it gave a swing point. Yes, it gave a candle we wanted, but it didn't do anything new, right? Price would have to close below this area, right? It didn't do that. So then when price pulls up and does it again, it did something new. So then we will mark this area, right? So we know that this is going to be a strong area if price returns back to it. If you look at this as one straight area, then you would just mark this area. It's totally up to you, whichever one you want to mark. Now, if you're looking at it on the 2 minute, you say, okay, this is a strong area, right? So we see price put in a swing point at those lows, gave us a candle that we want, and it's starting to make its way to the upside. Now, our lows are getting higher. That's not what we're supposed to do if we are going to continue heading to the downside, right? Now, the 2 minute is saying that this is a strong area, but let's go look at this 15-minute time frame. 15-minute time frame gave the same swing point that the 2 minute did, but it's not telling you that this is a strong area. Why? Because we didn't go do something new. Did we do something new? We didn't do nothing new, right? So since we didn't do anything new, this is not a strong area. So when price gets back to this area, I'm expecting price to disrespect it. I'm expecting price to disrespect it. Now, if you look at that in pieces, then that's that. But if you look at this at one straight leg, then you would be up here at the top and you say, okay, well, yeah, this is a strong area. But you see how the two got to go because you might be looking at the 2 minute and be like, oh, this is a strong area. This is a strong leg. Price probably going to get up here and respect it. And I'm going to play it back to the downside. But your 15-minute is not telling you that same story. Remember, it's got to be in confluence. It's got to align. If something is not in alignment, then you don't have a trade. You don't have a trade. All right, so now let's go over the bread and butter. And this is just some of the key things that we talked about in today's session. We talked about not all swing points carry strength behind it, right? We identify the weak ones, we identify the strong ones, we know what price has to do, but we got to eliminate those weak levels, right? Take some of that noise off our charts. We understand that structure identifies the turn, but strength confirms the decision, right? We can have swing points all day on our charts, swing highs and swing lows, but it's that strength that comes after it that lets us know if this is somewhere we should keep our focus or should we focus somewhere else. We want to look for those aggressive moves after um, that swing point has been put in, right? We want to see price break structure, meaning it has to go do something new. It has to go close lower or it has to go close higher. We understand with swings, the strong swing levels, Those are those support and resistance levels, or supply and demand, whatever you want to call it. Those are the levels that we want to pay more attention to. And we talked about those long wicks. Those long wicks do not matter if it doesn't do anything of any significance after, right? It has to go move aggressively. It has to give us those candles, those big body candles that we like to see. It has to go do something new. If it doesn't do that, then all you have is simply a long wick, and that is it. And that is not something that we should be focused on. All right, so we have come to the end of this session. I need you guys to understand it doesn't stop here, right? It doesn't stop here. I need you guys to take this information and go apply it to the charts. Go back test, go see what I'm talking about. So that chart that I showed you guys, that was from February 9th. Go compare that 15-minute chart to the 1 hour time frame, and you will be able to identify why some of those trades you didn't need to take, or some of those trades you could have held based off of what the hour time frame is saying. But don't stop here, right? Go look at that higher time frame. Go look at the smaller time frames and just drop down and identify those strong areas that you can use to swing trade, day trade, right? It works in any market. It doesn't matter the market, options, futures, forex, it doesn't matter, right? But go put in that work. Don't stop here. I thank you guys for joining me today. I thank you guys. You guys remain blessed. Thank you for breaking bread with me. You guys be safe.